welcome to Market Buzz. I'm Greg Schnell, host of the Market Buzz, and each show we do a deep dive into different industries using weekly charts typically to study what's going on a longer timeline basis. So not a day trading course, but a different way to look at the markets and keep a big picture view. You can find my work on StockCharts.com as the Canadian technician author or on ospreystrategic.org. So with that, let's kick it off. This week I want to cover off an area that was all the rage in February of 2021, and now I want to go back and look at 1 year later. And there's a couple of reasons to go back and review the prior example. What I want to talk about is specifically the mentality that went on back then, the types of market influence we had, and then how that turned out so that the next time you're tempted to invest in a meme stock or all the rage, that you're at least considering the technical analysis perspective or behavioral analysis perspective, which discusses or looks at what investors are doing with their money. And then that way we try not to get caught up in the hype, and we can work specifically towards making sure that we're investing in something that's trending higher, not lower. Okay, so let's get into the charts here. What we can see on this, this is a list of my electric vehicles chart list, and setting it up so the period is 1 year, and I've zoomed in, I've made it a little smaller just to get all of these scales on the right hand side on the charts. But for the most part, all of the new names that were coming to market all got crushed. And hey, let's face it, they had huge market valuation, so even if they got crushed by half, they're probably still significantly more capitalized than some of the other traditional car makers. It was pretty heady times when they were selling shares back then. So what I'd like to do is just show you that Ford was now the top one, and we're going to get into this list and just work through it this week. I think it's probably one of the most important parts of behavioral analysis is to make sure that you're aware as the trend changes and not get caught up in the story, be it ESG or meme stocks or whatever the flavor of the day is. At least understand when that trend is changing. So with that, let's jump in and start to look through these charts. And as we get there, I'd like to describe what is happening. Actually, that's not going to work very well, so let's do it this way. So what I'd like to show you, first of all, is what happened. You might remember in February 2021, we had all of these SPACs coming to market. And actually, there's another chart I'd like to show. I'll just go get it here. $COMPQ. And what we want to do is look on a weekly basis or even a monthly basis. And yeah, probably monthly. Let me just change that to down here. We're going to go monthly, and I want to show you a 25-year picture of just what happened specifically in that year. So our volume was ticking along around 40 to 50 billion a month, and then all of a sudden COVID hit and we spiked up to around 80 to 100 billion a month. And then the first 3 months of 2021, we had incredible volumes of 130 and 140 billion shares a month. So we literally had this rush of enthusiasm into the market. And Robinhood was sprinkling confetti on our screens every time we bought a stock. And it was a party atmosphere. Everybody was getting on board. And EVs were going to be all the hype. President Biden had just been elected, and so it was going to be the environmental world, and ESG was the way to go, and all of these stocks were hyped up. So again, I've sorted these in what's performed best over the last year, but if we'd have sorted them by market cap, even as little as 1 year ago, their list could have literally been reversed. So it was pretty heady times. But what we see here is Ford actually did pretty well from this period of time up. And they came out with the EV, the Ford truck electric version, the Ford Mustang, and the Ford Bronco, which I don't know if it's in an E version. I think it's just regular internal combustion. But the idea being that this stock has done a pretty good job of running higher, and just being aware of the trend in Ford has done pretty well. So this stock was trading, I'll call it around 11 something, went all the way up to $25, so a double in a little under a year. Now it's given back about 50% of that. So pretty big change. And some of the bigger moves that we can just see on here were in March, the PPO, the momentum indicator, rolled over. In May it rolled, or early June it rolled over again, and then it rolled over just recently here in January, and we've been sliding since. So macro picture, weekly chart, just when these momentum indicators rolled over, it was a good time to at least be aware of potential for some downslide. Now, I'd still be happy with a 50% gain. I'd probably be less happy that I gave back more than double that amount. So that would be a problem for me. But the idea is this was one of the better stocks. Now let's just quickly shoot to the bottom of the list and examine what happened down here. So this is a good example of what we were looking for then. We had all of these stocks breaking out in June. They went on a big run. And then in February, they had this absolutely mammoth boost. And what we saw was a $25 stock went to 42 in 2 weeks. Rolled over, and now really, this $43 stock, you can have as many shares as you want at $3. And we can also see that the volume pop in here was pretty significant. Again, let's just talk a normal stock. Trading 1 million shares a day would be a big deal. Here's a company nobody had even heard about, and this thing was trading, 300 million shares in 1 week. So that was pretty significant. And even on the way up in January here, this thing was popping above 100 million and 200 million shares. And again, most people hadn't even heard of the company. So it was pretty remarkable heady times, but it's this ski hill effect that we've created since then, where literally every week the stock was dropping, and we had the odd rebound. But another technically correct chart here, you break down below, you rally back up, and you stall around the 40-week moving average, and this continues to go down. Now, when do we want to get back on board this stock? Well, probably when at least the momentum returns to above zero. That would be helpful. Or we want to wait until the majority of these charts are starting to turn up. And using this chart, it doesn't look like we're there yet. So again, the purpose of this discussion today isn't to tell you to go buy e-vehicles. That isn't it, the stock or the car. It's literally, we want to talk about what the investor behavior or the psychology of the moment was and how that panned out. And in September of 2020, I had started an EV newsletter. And by May, we had discontinued it. And the reason was every week we were talking about charts, but they continued to break lower. And it was very difficult to try and help anybody invest in the sector when obviously we'd been through some sort of a mammoth bubble and we were winding down on that. So if we just work through some of these charts, here's Lordstown Motors. This was, they're going to have a competitor car, blah, blah, blah. This thing was 3180 in September, and it was 3157 in February of 2021. And it looked like it was getting ready, a series of rising lows coming up against prior highs, and they just couldn't get through it. And so what we know in behavioral analysis is when you're trying to make 52-week highs and you can't get through, that's a problem. And what we want to see, obviously back in here, there was nothing going on, and then it broke out and it literally kept going. So that's the kind of breakout we want to own. We don't want to own it where it pushes up, pulls back down, and can't get going again. So totally different types of style, but it's the reason that we watch prior highs so closely to make sure the price action is solid. And as the price moves above the prior highs, we want to know, Are we seeing zero volume, so it was only 100 shares traded at that, or are we getting a breakout in volume as well? All of those are important. So as we rolled through this February, and again, I showed you the Nasdaq had just an unlimited number of shares trading, and then down this thing went. So this was $31. Now it sits at $3, so at 90% off, and it's been as low as 2, so 95% off. Even though President Biden was supposed to be good for the environment and working on all of that kind of stuff, it's really important not to get caught up in the political narrative. As you can see in this case, regardless of $5 billion for funding of electric charging stations across America and tax programs for people buying EVs and all that kind of stuff, it did nothing to support these charts after the magnanimous boom thrust, meme stock type of momentum that they had been in. And here's another one. This was a company called ARVL, and literally it was a SPAC. It came on the market, all of a sudden pops up and announces, and this thing goes from $10 to $37 in 3 weeks. By February, it was only in around the $30 level, and this thing is now $4. So once again, and this CIG merger company, I think they actually did 3 different companies and absorbed a whole bunch of capital from investors, and then only to leave the investors sitting there with an 80% loss, and they were sitting there with all of the money at the top. AYRO, these are small electric commercial delivery vehicles. You can see in February it started to break out to new highs, and that's pretty bullish, right? All of a sudden we're perking up, and this chart is a series of rising lows, looks really good, broke out, couldn't hold it, and in a couple of weeks we were cut in half. So that even that would have been painful for somebody to take a loss on, because it went from $11.50 down to $6 in 2.5 weeks kind of thing, really, really quick. And then when the next week went all the way down into the 450 level, bounced off the 200-day moving average, but then you could just see no real buyers stepping up for this all the way along. And even last week it tried to rally up, couldn't hold it, and ended up giving it back. So far, the first trading day of this week, we dropped another 7%. So if you got in it last week, it felt like, okay, maybe I've got hope. Well, now you're down 7.5%. You're 1 trading day away from last Friday. This is a meaningful drop, but it's this meaningful drop from 11 to 1 that makes it hard for most investors. And there's nothing on this chart anywhere in here where momentum gave a cross on a PPO line or something like that. So we can use these tools to help us. So what are some of the things we saw here? Well, if we want to annotate the chart, okay, we were trying to break through prior highs, and I'm going to pick this 875 level. We got up against it once before. Here we pushed through, couldn't hold above it, pushed through again, couldn't hold it. So we would call that a failed breakout. Now, it's hard when you buy a stock that went from $4 to 10. How are you going to where are you going to set your stop loss? So the poor person who was buying up here as a breakout to new 52-week highs, that's difficult to begin with. But the real problem is trying to buy after a surge from 3 to 10, or call it $3 to $11 in just 3 weeks. That's very difficult timing. So we went along and it basically consolidated and then gave one big shot. And again, in the hype of SPAC mania, shot up to 1150. So again, it looks good. It closed slightly below the prior high, tried to open higher the following week, and literally went down and dropped and dropped and dropped. We closed at $1.11 and we started at 1150. That is just such an extravagant loss. So one of the things that it's important to do is if you're going to invest in breakout trades, you need to make sure that if they do reverse, you don't just say, well, it's a strong stock and I'm in the right sector and I can just stay here and ride it out. Because the problem, first of all, was the volume went crazy, which was pretty rare. But the second component of that, we had a lot of interest back here, less here, less here. And so as this was proceeding on each one of these breakouts, we were getting less and less volume. That's part of the problem. But the other thing is the stock runs down, 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 down. You're holding it, and now you have to try and find a reason to sell it or a reason to keep holding it. And in most cases, it's a loss in your account. Well, I'm in the right sector. It's in ESG investing. I'll just wait and let it turn higher. The problem with that thinking is this thing dropped in half, whether it was 3 weeks out, to give you a chance to sell it at that level again and again. And then even from here, this was $6 to $1, even that is a 75% drop from a lower level of half. But the concern, two things happen. One is your mental capital, your confidence in investing gets beaten up. First of all, hopefully you didn't borrow money or trade on margin or any of those things, or buy more shares than you could afford to lose. All of those things are risk factors. Now, again, you're buying a stock breaking out to new 52-week highs. That should be bullish. But I think as we can see just on this one chart, how difficult that is if you don't consider a loss along the way and just letting it keep chewing into your capital. So here's Hyliion Holdings. They have a very fancy sports car on the front page of their website. This was $58. It was only $22 by the time the February SPAC merger or SPAC mania came along, and it had been $10 to $56. So this was a 6x ride up. And now it sits down here at $350, and you've lost your capital, you've lost your mental capital, and you're still holding this stock. So how do we get out of it? Well, the answer is to just sell it and try to find something going up instead of waiting for this one to improve. Would typically be what we would say in the trading world. Now here's GreenPower Motors, and this one topped out right in that February timeframe, again trying to break out to new prior highs. And you could see, let's call it $43, $44, ends up at $7.50. So it's still down a lot. It's down 80%. But again, there's no real reason to see hope here yet. And for me, I think I'd use two different things. One is if we could start to see the momentum trend change, like maybe this starts to go up here, but I'd actually want to wait for a higher high. So I want this line to curve up like this. And then I want another one to go like this. So I'm just going to drag this down. And then as it bounces in here, that's probably more likely when I'd think about taking a trade on this. So I want to see the momentum trend break. I want to see a good run up, maybe around the zero level, and then a pullback. And on that pullback, I'd be more interested in looking at it. Again, I don't have to pick it up in the 750. I could pick it up at the 1250. I just want to pick it up when it's finally heading higher, because this thing's had like 5 or 6 false starts in here. And then the next component, just again, this we keep working through, what could we learn by this lesson? Very difficult to buy on the top of these major spikes. Very tempting, but very difficult. This thing's going to the moon, baby. And the problem with that approach, almost always when you look at these large wicks, just almost every one of them, the next candle's weaker and they go back and they build a consolidation. And so you have the opportunity to buy a consolidation. Now, so you've got this downtrend and now it's at least broken through the 10-week moving average. Cool. Well, let's watch and see, can it make a higher high or consolidate for a while and give me maybe a 4-week base before we start to think about buying in on something like that. And then Arcimoto, this is another one. The uptrend was breaking right here. I mean, these lines are on the chart from a year ago, and I would be saying you got to get out right here, right now. Your PPO, your momentum trade is breaking. The trend in momentum is breaking, and the trend in your relative strength compared to the S&P 500 is breaking. Your uptrend in price is breaking. All of these things say leave the party. Well, if you left at 36, or if you left somewhere up here in the 30s, let's just say, that would have been helpful. But all of a sudden it drops down to $7. You think you've seen the worst. It bounces to 18. That's a double. And yet it goes from 18 and now it's back at 5. So it's really important to be aware of what happened here. You were living below the 40-week moving average. It finally turned above and went on a one-year run. It went below. Basically, it struggled to get above the 40-week moving average, and now it's turning down. This is like over and over and over and over again. And we can see this trend happening on lots of different stocks. Here's Solo, the Electrameccanica car. It is, I saw one in Scottsdale. They're basically sitting on the side of the sidewalk. You've got a little kind of, movie lineup ring around it, like it's in a showroom or something, but it's sitting outside under a little tent, a 10 by 10 awning, and somebody's selling this car. And don't get me wrong, it's a good idea. It's got all of the right things, but here you are. This thing went ballistic from 2 to 13, pulls back, tries to break out again early February, moved below its 10-week moving average and didn't get back above it until June, spent 3 weeks, it fell back below. Like, we can see the problem. Your 200-day or 40-week moving average has started to turn down. The 10-week is below the 40-week. These are bear market conditions that we don't want to see. Now, if we go look at the Nasdaq Composite right now on a weekly chart, it's just given us this 10-week minus 40-week cross. Let me go get that. So we're just seeing it here. And again, the first time we saw that was back here in 2020, and we were already on our way up then. Well, now the real question is the Fed going to come and help us? The point I want to make is try not to get hung up in the story. Try to make sure you're understanding what the chart is telling you. And even if you have to take a loss that's larger than you would like, when the chart starts to change behavior, and especially in this case, the whole industry started to change behavior, it was much better to step aside and let the whole thing fall without you owning part of it. Now here's Chinese scooters, again, topped out in February and was 53, now 12. Nikola Corporation topped out in the prior year, whole bunch of scandals around the original entrepreneur that had started the company. But here we are in February. This thing was 93. It's trading at around $25, and now it's trading at 5 or 7. These are really disastrous, both for your confidence and for listening to a story, the 10-week crossed below the 40-week, and it's been that way ever since. Is there a reason to own it before that? And it would have to be a pretty good article or reason. Here's Northern Genesis. It takes off, runs up 35 to 8. So the story is over and over and over in all of these new names. We're not talking the Fords of the world, and they were at the other end of the list, right? So Ford's up here. Let's just look at how the difference in chart shape. So betting against these big companies didn't help much. Volkswagen topped out in March, but it's gently been dribbling lower. The 10-week crossed below the 40-week. There's no real reason to own this chart just yet. Toyota Motor, at least it's holding its trend, but it looks like it's trying to test this long trend line this week. At this point, it's at least be cautious here because it's starting to break down. BMW, same thing, sitting on the trend line. Fiat Chrysler, sitting on a horizontal trend line. It broke the uptrend long time ago. So as you look through the group of charts, the best thing I find is what information can I glean from looking at the broader picture? And in all of these cases, as the market was starting to change, it's important to understand, first of all, that we were in a bubble. The volume was going crazy. We had the TV shows had CEO after CEO and CEO of companies we've never heard of going public. And at the end of all of that, where did it leave us? It left us in a position where we got caught up in the hype and we couldn't make any money from it. So with that, I'd like to wrap it up. Again, the big picture or the big learning here is whatever the story is, make sure the charts are agreeing with the story rather than just following the hype that's out there. Thank you for taking the time to join me on Market Buzz. Market Buzz airs on Wednesdays at 10:30 a.m. Eastern Time. You can also find the recording of it on StockCharts TV. Thanks, everybody. Have a great week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.